Start. Okay, good afternoon. Now, this should be the last lecture session of the financial accounting, and so far we have already finished that 14 lecture series, and this should be the last one. And also that the last week I started discussion with financial analysis, financial statement analysis, and today we discuss few examples of financial statement analysis. One is that what we have discussed in the previous week, and also it would help you to write your assignment. Assignment 3 is now available, but there's a problem in assignment 3 Dropbox. Now I adjust the date of 30th September 2016. Therefore, another 1 week to go. Then you could do it. Even after finishing today's lecture, you can get some idea how to do this lecture, how to do this assignment. Therefore, what you have to do is actually that you have already collected one set of financial statement and the information already submitted for assignment 2. The same information you take for the assignment 3, and what you have to do is take the same information and analyze that few ratios, and write short description about that overall efficiency of the company. And in some cases, sometimes that you may have not found the buying and selling businesses financial statement. Sometimes you may find that the financial statement related to the banking sector. Therefore, that you cannot calculate that all these ratios based on that information available. Therefore, if you take the banking and financial institution financial statement, sometimes you cannot calculate that inventory ratios or the gross profit ratios, so on. But it doesn't matter. You just ignore that ratios and calculate whatever the available information. Because if you want to calculate all these ratios, you have to take manufacturing business financial statement. But all informations are available. Soft copies are available in the net. Therefore, download one. Take the soft copy. That will reduce your time. Otherwise, that if you take that hard copy, you have to retype each and every item. Then it is very difficult. Therefore, download the soft copy and just copy and paste to your assignment is very easy. Therefore, don't take that hard copies. Then if you take the hard copies, you have to retype everything. It takes times. Okay, now today I am going to discuss with you the few questions related to the financial statement analysis, and actually this first and second questions I have discussed, and the third one too discussed, and start with that starters number 4. Okay, start with number 4, and there are few students online too, and in front of me. Start with the number 1, and yes, you do it 1, 2, 3, 4, 5. first 5 questions you start, then I will let you know that after finishing I will guide you how to finalize these questions. For example, one is net profit was 900,000 in year 1, year 2 1,200,000, year 3 960,000. What were the percentages changes in net profit? It is also one type of analysis what I have discussed with you, and see whether what are the percentage changes in net profit. Okay, we'll take the first one. Then net profit was 900,000 in year 1 and 1,200 in the year 2. And year 1 900,000 increased by 300,000. Increased by 300,000. Therefore, percentage of increase 300 divided by 900 is 33 1/3%. And again the year 3 960,000 reduced by again 240,000. Therefore, 240 divided by 1,200 is closely 20% decrease. This one is the answer. 300,000 divided by 900, therefore increased by 33 1/3%. And year 3, when comparing that year 2 and 3, 240 reduced 1,200 to 960, therefore reduced by 20%. It is one type of analysis. Even though that profit increase or decrease, you could analyze this way as a percentage. When comparing the year 1 and year 2, 33 1/3%, 33% increase and 20% decrease secondly. Okay. Then go to the second one, calculate the earning per share. Actually, that earning per share would be calculated net profit divided by ordinary shares issued. Net profit divided by ordinary shares issued. But here the problem is, during the year, the issues of shares differ from period to period. Therefore, we cannot calculate directly. We have to calculate average the shares during the period. Average shares held during the period. We will take that first one, 300,000 ordinary shares issued at the beginning of the year. Then January 1st, there are about 300,000 shares up to 1st March, January, February, 2 months. 2 months, the company had 300,000 shares. Therefore, we take the average 2 months, 300,000 shares held at 2 months. Then how much? Average is, that should be 50,000 shares. that we average it, how many, because that, yeah, otherwise what we have to do is 300,000, sorry, the total profit is 1,570 divided by 300,000, that is the earning per share. But the problem is, now time to time, the shares were issued and the total shares be changed. Therefore, now we take the average. 300,000 shares were held for 2 months, that is 50,000. That's average 50,000. And again, what happened? On March 1st, 200,000 additional shares were sold, additional shares were issued. Then what happened? Again, now the 500,000. 500,000 shares were in the company for another 4 months. March, April, May, June. Then June 3rd again changed. Therefore, 4 months, average period is 166,667. Likewise, we have to take that average shares during the period. Then again, what happened? 150,000 shares were exchanged. Again issued 150. Then 650,000 shares for another 4 months. And finally, the broker 110,020. That means redeemed. Again, we have to reduce 110,020 from 650,000, and that was in 1st of November, December, 2 months. Therefore, overall average we could calculate at 523,331 shares. Averagely calculate 523,331 shares were in the company during the period. Not exact amount, that is average shares during the period. Therefore, this is the shares issued and divided by the profit 1,570, then earning per share approximately 3 rupees. This based on weighted average number of shares held in the company. Otherwise, there is no other way to calculate the number of shares in the company. Therefore, average 3 rupees per share. Actually, what we have to do is very simple. Earning per share should be calculated. Profit, net profit available divided by ordinary shares held. But in this case, we cannot calculate exact how many shares held during the period. There are some changes. Therefore, we calculate average period and divided by, that should be 3 rupees. Okay, number 3. This is the consolidated income statement and complete the vertical analysis. Vertical analysis. When calculating vertical analysis, that is the statement in demonstration problem 1. And go to the demonstration problem 1. That is in the last page, the consolidated complex company. Page number 14. The consolidated finance net sales, cost of product sold, net profit likewise. The net sales, the all figures we could calculate as we just copy and paste here. Now calculate net sales as 100% and what is the percentage cost of product sold 1,123,459 is what is the percentage of sales. Then this amount divided by the net sales, then the percentage comes. We assume that net sales as 100% and cost of sales, cost of production sold as a percentage of sales, how much? And selling and delivering expenses 543 divided by 2,532,651 as a percentage of sales. That's called the vertical analysis. This should be the answer. %, selling and distribution 21%, advertising 13%, research and development 2%, interest expense 2%, other expenses 0.2%, and profit total cost is 83% and profit therefore 16%, and income tax is 6% and net profit is 9.8%. Okay. Question. Page 14. This one. You go down and the last page. you can find this income statement. Demonstration 1, not demonstration 2, just before the last page. Page number 14, 14. Yes. 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 Okay, now go to the question number 4. Calculate the gross profit rate for 2008. Gross profit. How to calculate the gross profit? Gross profit means net sales minus cost of products sold. Then you can find the gross profit. Then how much is the gross profit? 2532,651 reduce 1123. Then that should be the net profit, sorry, gross profit. Then gross profit divided by 2532,651, that should be the gross profit ratio. Otherwise, that is very easy to calculate this way. Net sales is 100% minus cost of goods sold. What is the percentage? 44% is equal to Now 55% 0.6. Because here or otherwise that you can take that full figures 2532 minus 1143 is the gross profit. Gross profit divided by sales is the gross profit ratio. Anyway, gross profit ratio is 55% 55.6. Then number 5, calculate the trend percentage. How is the trend? 2004 to 2008, how is the trend? Sales and net earnings. We take the 2004 as a base one, 100%. Net sales 100% 2004. How is change 2004 to 2005? How much increase? 5 to 6 how much increase? 6 to 7 how much increase? 7 to 8 how much increase? We take as 2004 as 100, then increase by 1836, then how they take the difference and calculate the percentage, then that is the trend of net sales. Likewise, net earnings 167,051 to 2012-57. How much increase? What is the trend? And this should be the answer. 2004 as 100, then change 112, 121, 36, 155. Net earnings also increase 127, 120, 133, 149. And trend is increasing trend in net sales as well as the net earnings. How to calculate this figure is actually that what you have to do is from 2004 as 100, 2004 to 2005 how much change increase, get the increase amount divided by 2004 figure, the previous year figure, then increase by 112. Again go to the 2005, 5 to 6, take this one and increase value 5 to 6 how much increase divided by 2005 figure, then increase by 121. Likewise, but if you transfer these figures into the Excel sheet, that is very easy. Just see how much increase by year by year. That is very simple exercise. The percentage of, by percentage, do the analysis. However, that all accounting information we extracted from the financial statement. But by seeing the financial statement, you cannot take decisions. But do some analysis and by seeing that analysis, you can take decision. By seeing this trend analysis, you could see now there is increase in trend in sales, increase in trend in sales, or otherwise that you can prepare a graph and say now there is an increase in trend in sales 2004 to 2008. Again you can compare with earnings, again that it is also increasing trend. Because by seeing the figures you cannot take decision, but by transferring that the amounts into percentage, you could take some decisions. That should be helpful for your your assignment, and also that is some research work, small research work findings. Okay, now number 5, exercises. Farm industries had the following information for 2007. What is the inventory turnover? How to calculate inventory turnover? Cost of goods sold divided by average stock. Cost of goods sold divided by average stock. Cost of goods sold is 800,000. Average stock. Opening stock 60,000, ending stock 30,000. Then average stock is 45. 800,000 divided by 45,000 is the inventory turnover. Inventory turnover is approximately 17%. Divided by 60,000 plus 30,000 by 2, that is the average stock, and that should be closely 17.78. Second one, what is the account receivable turnover? Like that inventory turnover, this should be the account receivable turnover. Account receivable based on sales, credit sales 1,450,000. Divided by average debtors. Beginning of the account receivable 85,000 and ending 75,000. 85,000, 75,000 divided by 2. Then you can calculate account receivable turnover, that should be closely 18.1. Then what is the days sales in average receivable? Average receivable, days sales in average receivable. Average receivable is 85,000 plus 75,000 divided by 2, that is the average receivable, divided by 1 day sales. 1 day sales. 1 day sales, how to calculate 1 day sales? Total sales is 1,450,000 divided by 365, that is 1 day sales. Average debtors divided by 1 day sales, and approximately 20 days. Is collection period, debtors collection period is, or day sales in average receivable is 20 days. Average debtors divided by 1 day sales. Number 2. Rate of return on net sales. Net sales is 900,000 and net profit is 60,000. 60,000 divided by 900,000, that is the net rate, the rate of return on net sales. Approximately 7.7%. What is the rate of return on total assets? Total assets, average total asset given 1,956,521. Rate of return, that means the net profit. When calculating the rate of return on total asset, we have to add back interest expenses to the profit. Then that should be the total profit. 60,000 is the net profit. Add back interest expense, then divided by average total assets 1,956. Is approximately 6.9. What is the rate of return on ordinary shareholders' equity? We take that net profit 60,000, add back to any preference dividend. Yes, preference dividend is 20,000. Then this is the profit available for ordinary shareholders. This is the profit available for ordinary shareholders. Divided by ordinary shares 50. Average ordinary shareholders equity is 1,575,000. Ordinary shareholders equity. This is the profit available for ordinary shareholders. Not only 60,000 we want to take, plus the preference dividend. Then that should be 2.5. Number 3, information given. What is the current ratio? What is the current ratio? Current ratio means current assets to current liabilities. Why? What's the question? What's the problem? Two point? $60,000 plus 20,000 is 80,000. 80,000 divided by 1,575,000. 5.0. Ordinary shareholders equity how much? Ordinary shareholders equity, average ordinary shareholders equity 1,575,000. Add that, because net profit comes after preference shares dividend. Therefore, we have to add back, because that profit is available for ordinary shareholders. Therefore, we have to add back the profit available for ordinary shareholders. Sorry. That's correct, yes. Profit available for ordinary shareholders after deducting, yes, that's correct, yes. Thank you. But answer is correct, 2.5 then. Yes. Because I have not calculated, I just put the answer. Then current ratio is current asset to current liabilities. Take current assets, cash, marketable securities, account receivable, inventory, all are current assets except equipment. Current liabilities, accounts payable, salary payable are current liabilities. Then ratio should be, don't take as long-term bonds and ordinary shares retained earnings, they are not current assets, current liabilities. Take current assets other than this equipment, liability side other than long-term bonds, ordinary shares and retained earnings, then current ratio should be around 4.4. Then acid test ratio, or called the quick ratio, quick assets, cash, marketable securities, account receivable, other than inventory. Inventory we considered not as an quick asset. Therefore, don't take inventory, other than inventory, other three, take that other three. And current liabilities, the same, 105 and 17. Then acid test ratio should be 3.2. And what is the debt ratio? Debt ratio is total debt divided by total assets. How much is the percentage of debt? How much is the percentage of debt out of the total assets? Total asset we know exactly 953,000. Total debt 105, 17, 165. All these three figures are debts. We can take that, we have to take that the short-term debts too. Short-term debts as well as long-term debts, all are debts. Because this 953,000 financed by these three, by outsiders, by these three. The ordinary shares and retained earnings are inside claims. Outsiders contributed for this 953 by these three. Therefore, debt is closely how much? 30%? Sorry. Closely 30%. Is that correct? Yeah, what is the answer? $32. But anyway, the total asset is 953. Total assets is 953. Financed by these three, 105, 17 and 165. Which sources? Ratio. Percentage. Yeah, I put the percentage as a percentage into 100. 30%. Or call that 1/3%. If you that as a percentage, it is 30%. As a or otherwise that if you put that as a just ignoring the percentage, that should be 33%, 33 closely 33.3. 1/3. Just ignore, but calculation is not necessary. You need how to calculate this one and how to take the decision. What it reflects. It reflects that how much money financed by the outsiders out of 953. The total asset is 953. That 953 financed by outsiders, accounts payable, salaries payable and long-term bonds are outsiders. Is 30% outsiders, 70% by insiders, inside capital. Price earning ratio of ratio is 19, dividend 150 per share and earning per share 1.28. What is the market price per share? And what is the dividend yield? This we have to do some calculations for finding out the market price per share. Now, we know that exactly market, we don't know market price per share. Yes, market price per share MPS divided by earning per share EPS is equal to price PE ratio, PER, that is the ratio. Market price per share divided by earning per share is equal to PER. Then we don't know market price per share. Now MPS we don't know, divided by EPS we know 1.28, and also we know exactly PER is 19. Then we can find the market price per share. Then what is the price? Price should be 19 multiplied by 1.28, that is closely 24. Exactly, we know that how to calculate PER. PER calculation is that MPS, market price per share, divided by EPS is PER. We know the PER, we know the EPS, therefore we can price per share is 24. What is the dividend yield? Dividend yield, DPS, dividend per share, divided by market price per ordinary share. Market price shares is equal to dividend yield. Dividend per share divided by market price per share is dividend yield. Dividend per share we know exactly 1.5 divided by MPS 24 is equal to dividend yield is 0.6, or otherwise that 6 point as a percentage 6%. I just put the percentage multiplied by 100, okay? So otherwise that put 0.06. Okay, then we did some direct calculation, especially for the ratios as well as the trend analysis and vertical analysis. And now there's another one, the demonstration problem 1. We will take that demonstration problem 1 after a few minutes. And now actually by seeing that all calculations, you could see now you concentrate on calculation. Now I know that exactly get the figure, but for master level student, you must understand not like that getting the figure, but what it reflects and what type of information by calculating this one, how to get that information from the financial statement. By seeing the financial statement, you cannot take that DPS, EPS, earning yield, how much you yield from by investing in this company. All these figures are not available in the direct financial statement. But by doing that, by the calculation, you can understand the different opinion. Therefore, that is much important for financial analysis. Actually, for assignment, you have to do the analysis. We don't know exactly, I don't know by checking that, by evaluating your answers, I don't know which answer is correct, because that all information with you. You can manipulate that information and just put the figure, it doesn't matter. But by getting that figure, what information you can get or what analysis you can do, how is that company going on, how is the percentage, or how is the increase in trend or decrease in trend on profit and the sales. That are These are much important. Therefore, for assignment, you can get more marks, not only for the answers. Answers, I don't know whether it is correct or wrong, but based on that your answer, what you reflect, what is your analysis, that is much important for understanding the financial statement. Therefore, don't jump, just calculate and present document to the assignment 3 box. That is very easy. Even A-level student can do it. But you must understand what reflect in this financial statement, what information available and efficiency or increasing or decreasing trend of sales and the profit. Even if you write some one paragraph, that is much important than concentrate on calculation. Okay, thank you very much, and we'll come back to this demonstration problem after few minutes and discuss further the financial analysis. Okay, now we start demonstration problem number 1, but I discuss only today problem number 1 and problem number 2 for self studies, and with that point we can finish the all lecture series. Yes, go back to the question demonstration number 1. There is complex compounding. Just go through and see whether that what are the questions they ask, and we can discuss later. First question is that working capital as you all know that working capital is current assets minus current liabilities. Current assets minus current liabilities. Now it is very clear. Now in this case, current assets 173,497, that is the total. Current liabilities 892,780. Therefore, this minus this working capital should be this minus figure 219,221. Negative working capital. No need to take that, the total is already given, therefore total current assets minus total current liabilities. Current ratio. The same figures, current asset divided by current liabilities. Current asset 673,497 divided by current liabilities 892,780. The ratio should be around 0.75. Acid test ratio, that's quick ratio. Quick asset divided by current liabilities. What are the quick assets? Short-term investment is the quick assets. And account receivable is also quick assets. And other inventories, prepaid expenses, future income tax benefits are not quick assets. They cannot, all these figures cannot be converted into cash quickly. Divided by current liabilities, that's costly 0.51. Inventory turnover, average inventory, under 73, 140, plus 138, 848, divided by 2, that is the average inventory. Cost of goods sold divided by average inventory is the average inventory turnover. Cost of goods sold, where is 1123, 459. Divided by this average inventory, then turnover should be 7.2. Account receivable turnover, credit sales, not define credit and cash, therefore we take all credit net sales, divided by average debtors. That is called account receivable turnover. That means average 7.5 times. The days sales in receivable or debtors collection period, average account receivable divided by 1 day sales. average account receivable, from this you can calculate, divided by 1 day sales. How do you calculate 1 day sales? Sales divided by 365 days. Approximately 48 days. Debt ratio, total debt divided by total assets. Total debt including current liabilities is 1,741,906 total liabilities, other than the shareholders' equity and total debt 1,741,106 divided by total assets 2,777,952 into 100 as a percentage. It is better to provide as a percentage, therefore plus closely 62%. Times interest earned ratio, times interest earned ratio, profit before interest divided by interest expense, profit before interest profit before interest means the profit after interest 416,015, therefore we have to plus the interest expense. Divided by interest expense. Approximately 8 times. Then it reflects that how many times that interest expenses can be covered in the total profit. This 8 times. The 55,000 is the interest. The company earns 8 times of the interest expense, the profit is 8 times of the interest expense. Therefore, this is very good cover the interest expense. Rate of return on sales. Rate of return on sales. Net profit divided by sales. Net profit after all taxes and profits, all taxes, that is called the net profit, divided by sales. Or you can put as a percentage 9, approximately 9. Rate of return on total assets. Rate of return on total assets. Then you have to take profit before tax and before interest. Profit before tax 416,015 plus interest. Then you have to calculate the before interest. Therefore, add back the interest portion divided by the total assets. Total assets. How much is the calculation? %, 8, 11. I don't know exact amount, but you see, calculate and see. $16. Okay. Put the figure, it doesn't matter. The rate of return on ordinary shareholders' equity. Then you have to calculate profit available for ordinary shareholders. Now, profit is 249,442 minus preference dividend. Preference dividend, how much? Is it available in the, is it not available in the income statement? You can calculate here. Preference dividend, preference share 66,803. Assuming annual dividend 1.16 for both preference and ordinary shareholders. Therefore 1.16 into 803. Divided by ordinary shareholders' equity. And then 10,844. Not only that, plus retained earnings. Then how much is the rate of return on ordinary shares equity? As a percentage, how much? 18, 14 or 20? We calculate this one and get the figure. As a percentage, 14.9. Earning per share. Net profit after preference dividend. We have calculated somewhere. Yeah, this is the net profit after preference dividend. And divided by ordinary shares. Ordinary shares issued. ₹1 share. Approximately 150. Price earning ratio. Market price per ordinary share divided by earning per share. Market price per ordinary share is 19.83. Divided by, we got the figure earning per share, $12.8. Dividend yield, that is dividend per share, already given 1.16 divided by market value per share. Closely approximately 5.8. Book value per ordinary share. Ordinary shares equity, ordinary shareholders equity. Ordinary shareholders equity means other than preference shareholders. This plus this, and then test this plus retained earnings is the ordinary shareholders equity divided by ordinary shares held with the book value. Then you can calculate the yield. Book value is closely 8.7. That's all. These calculations are much important for your assignment too, because that you have to calculate that all these the ratio analysis of your by using that your own figures in your financial statement, and it is very easy to calculate this one. Take the Excel sheet, transfer the all figures into the Excel sheet and just calculate everything. Then by doing that, after doing this, you have to put some one paragraph or two paragraph for efficiency and overall performance of the company. Okay, that is much important. In just calculation and finish, you can get only the few marks, but if you want to get that more marks, write something on the efficiency of the company. Okay, now demonstration problem 2 is actually based on the percentage horizontal analysis, the changes, increase and decreases. You do yourself this, and I will put the answers later on, but try to prepare this horizontal analysis for 2008. And yes, now actually that we have already finished now the all lecture series and almost finished that all the course contents by doing that 15 lecture series. Myself, I did that, I think that 7 lectures, and the Mr. Saman Bandara did that other part, and already now covered that basic accounting parts, preparation of the financial statement, company, different field, partnership and sole proprietorship, as well as a few cash flow statement And in preparation of the company financial statement, you studied the guidelines available, and finally how to analyze that financial statement. That's enough for the first level of master level students. This part is actually not only for very first day I have mentioned, not only for the calculation. Accounting calculation is very easy, but by taking the decisions, that is the main objective of accounting. By taking the decision based on this information, different calculation, different analysis you did. This is much important for your job as well as your research. You have to do small research work in the second semester. That would be much helpful. This analysis much helpful for complete your research assignment. Okay, thank you very much, and I will come again in the next semester to discuss with you that research, how to do a research proposal, and most part of that lecture series I do, and you have to work with me again 5-6 lecture series and complete your research proposal. Okay, thank you very much, and we'll meet you again in the next semester, and all the best. Thank you.